gold is such a standout, right? I mean, compared to the other commodities, compared to the stock market, compared to the dollar, it's just been one-way travel to the point where it's almost discomforting.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 22nd through April 29th, 2025, while supplies last. First this week, we feature 1-ounce silver Canadian maples at their lowest premium in years at just $3.49 over spot. Next, 1-ounce Gold Philharmonics are only $65 over spot. 1 10th-ounce Platinum Britannia are just $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Doomberg from the very popular Doomberg Substack. Doomberg, thank you so much for joining us today.
Elijah, great to see you, my friend.
Well, it's great to have you today. I did want to discuss the recession. You have been saying that we're in a recession right now. Last time we had you on, you talked about how this was kind of by design, potentially, by the Trump administration, how Trump has been really doing exactly what he said he would do. A lot of people think this is chaotic, what he's doing with tariffs and all of that. And the stock market is seemingly possibly crashing right now. We're seeing, just turmoil in global markets. Your perspective on what's going on right now and, the recession that you believe we're in right now.
Yeah, we wrote a piece called WrestleMania a couple of weeks ago where we flagged to our readers that our channel checks and industry were waving the flag of recession. I think we have enough contacts in the earliest parts of the supply chain that we could sense such things. A few weeks before they become mainstream, I see now that the investment banks on Wall Street are all upping the probability of a recession this year. Our view is we have been in one for several weeks. It'll take time for the official data recording agencies to retroactively say that this was the quarter that the recession started. I think it's largely by design, like we talked about before, but I think Trump has made a few important miscalculations. I think he has overestimated the leverage that the U.S. has both with China from a trade perspective and with Russia vis-a-vis the war in Ukraine. I think that he was expecting perhaps swifter, more comprehensive resolutions to both the hot and economic wars that the U.S. is currently entangled in. I think we wrote a piece again last week, or our most recent piece, Escalation Dominance, where we pointed out that it's probable that China actually has escalation dominance over the U.S. in the trade wars. And in any hot war, they also have significant leverage with respect to the Taiwan issue as well. So I think Trump assumed that he would get a swifter victory on tariffs than has materialized, and that would allow him to manage the economy into a spurt of growth before the upcoming midterm elections. If the Republicans get wiped out in the midterms, then Trump's presidency is in effect lame duck. And so it always was a race against the clock. But I do think that China has far more leverage in this trade war than Trump perhaps realized, and is even being internalized by the market. So happy to take it in any direction that you want to go, Elijah.
Well, I guess maybe if you can expand on how bad do you think this recession is going to be getting? And you mentioned how, it could be very negative for Trump. I know last time we had you on, we were talking about how possibly he could kind of play a Reagan in some sense where, Reagan, there was a recession to start his term, but at the end of his first term, he won almost all 50 states. And so we got out of that recession. But in your view, is it going to take longer? Is this going to be a bigger economic issue than just maybe a year or so?
I think there's a couple of important differences. So first of all, the China situation that we described. One of the things about a war is it actually isn't decided by who can inflict the most pain necessarily. It's often decided by who can absorb the most pain. And, the Chinese Communist Party runs a pretty comprehensive dictatorship with strong control over internal social media, and dissent is snuffed out rather quickly in sort of a dystopian merge of technology and dictatorship. And so the amount of pain that China can withstand from such a economic war is probably higher than what the average American citizen has been sold on how much pain is coming. So there's that. The other sort of big challenge is Trump is facing huge internal resistance to his agenda. Just look at the judicial interventions in the implementation of the things that he openly ran on. I mean, I do think as president, he is the only actual official in government who's been elected by all the people, and that should get far more deference from the judiciary branch than it's currently getting. But there's an active arm of the government that desperately wants Trump to fail. And we're seeing all manner of dirty tricks against the Trump administration that we saw in the first term. You'd think he would be used to these types of things, but the whole assault on Pete Hegseth and all of this other stuff, it's got all the hallmarks of sort of an inside intelligence job, trying to disrupt the Trump administration, trying to turn it into a situation of chaos and turmoil, which, to be fair, Trump sort of invites, just based on his style and his negotiation. So, the entire machinery of government in DC is hardwired to see that Trump fails, because he's truly trying to do something very transformative, which is to entirely reshape the relationship between the states and the federal government and the trading relationships, and basically abandoning the U.S. reserve currency status. I mean, if we're not going to run deficits, we can't hold the reserve currency, and he doesn't want to run trade deficits. And he's been very clear, by the way, like, again, 50 years of B-roll of Trump saying the same thing forever. It's why it surprises people that this is what he's trying to do. So I think there's significant challenges for Trump. I think his intent is sincere. His style is bombastic. It rubs some people the wrong way, and he has misstepped a few times. And I think the most important one is just underestimating China.
I think a lot of people are concerned that this recession, and also, as you mentioned, really, some might say the deep state trying to erect Trump's presidency, could really, I guess, make irrelevant a lot of the good things that Trump has done, whether it's dealing with some crazy social issues, or whether it's dealing with different, I guess, government inefficiencies with Doge, right? I mean, it seems like they're making at least some sort of impact there. But do you think the economic recession and all the chaos that's being born here, do you think that could be blamed on the Trump administration, and kind of all that good could be kind of swept under the rug, going maybe for the next, in the next administration or after the midterms?
I don't want to be too alarmist, Elijah, but it's probably worse than that. So I think, Trump was subject to significant lawfare. And now there's a bit of retribution going on. In a world where the deep state succeeds and they derail his presidency, and the Democrats get control of Congress in the 2026 election, and then maybe J.D. Vance doesn't win because, Gavin Newsom is a charismatic, slick debater, we could see a real destabilizing series of retribution actions taken against the right, and all the people that are in power now, the Pam Bondis, the Pete Hegseths, pick your favorite, the person who's in charge of immigration. Like, I wouldn't be surprised if having served in this administration in that, dark scenario that I just painted for you, would find a lot of these people being charged. And, it's a very dangerous spiral. I was violently opposed to what Biden was doing, from a political perspective. It was setting very dangerous precedents. Trump has driven right through those precedents and widened them. And one of the reasons you don't do such things, as understandable or as reasonable as it might be to extract such retribution, is because, the other side will eventually reascend into power. The whole immigration issue has been amazing to watch. You could skip all the legal due process coming in, and then you have an infinite amount of it before the government can send you out. That doesn't seem to be a very sustainable situation. I thought the Supreme Court's intervention in the matter was very dubious. But that's just signposts in the deep state, the DC establishment fighting back. And I wouldn't underestimate them. And then they will someday be in power again. And all of these precedents that were admittedly mostly created in the Biden administration that the Trump administration is now taking advantage of. I mean, the pendulum swings. It's not good for society. It's a very, very dangerous time for U.S. democracy.
Moving forward, then, I guess, what do we see under that, dark situation or scenario that you put forth in the financial system and also with respect to energy? I mean, how do you see all of that impacting those sectors?
I think the most important thing to watch for is this relationship between Jerome Powell and President Trump, which is another big difference and a big challenge for Trump, is the Fed is not going to accommodate him. The Fed is actively opposing his policies. And Trump is growing ever more frustrated with the Fed. He's openly talking about, if I want him gone, he'll be gone. He's calling them all kinds of names on social media. By the way, behavior that is unbecoming of a president, if we're being totally honest. But that's Trump. That's who he is. Everyone knows who he was when they voted for him. He won the election fair and square. This is what people wanted. And again, when you read Trump's Truth Social posts, you kind of have to correct for Trump being Trump and look for the inner message there. The Federal Reserve is not Trump's friend. Jerome Powell and Janet Yellen did everything in their power to see that the Democrats won the last election. They didn't. Janet Yellen, as a sort of a cabinet member, was gone and replaced with Scott Bessent, but Jerome Powell's still there. And we're already hearing rumblings of all the things that, the U.S. Treasury Department could do if the Fed won't act. But that is an example of what outside observers who are opposed to the president would say is proper Fed independence, what Trump loyalists might call mild insurrection. But there's a huge issue with the Fed. The Fed has a huge impact on the economy, on the stock market, on the capital markets in general. And it's very clear that both Jerome Powell and, to be fair, the full Federal Reserve Board members are unified in support of his policies. But Trump thinks rates should be lower to cushion the impact of tariffs. And Jerome Powell, politically or otherwise, is espousing the view that tariffs are, inflationary and we need to make sure that we don't stimulate into such a shock. And so that's the one thing that I would watch. I think the markets, at least the narrative that, the markets were kind of struggling this week because of this spat between Jerome Powell and Trump. I don't know how real that is. I think the markets were pretty frothy and we just have a natural correction. We're so immune to corrections now that we look for reasons that they exist that might not be there. But that's the big one on the board for us is, Powell's appointment runs out 2026, and who he's replaced with is an interesting issue. But whether he finishes his term or not, I think is the big question on the board.
Now, you've stated in, I believe, other interviews as well that what you're seeing kind of through your sources is similar supply chain issues right now. And that's one of the reasons you were thinking that we're in a recession. And so, supply chain issues similar to what we saw during the COVID era. Can you expand on maybe how bad do you think this is going to be getting? And also, what kind of further impact may this have on the markets? Because you mentioned how, the stock market is selling off. Is this just a correction in your view, or could we be heading significantly lower?
Probably both. Again, you never know. Like if the Fed intervenes and Trump, berates the Fed to the point where they do, quantitative easing, and you could see a flight. We saw that one day where I think the Nasdaq was up 12% just based on Trump walking back tariffs. Look, if it hits the wires tomorrow that the U.S. and China had struck a deal and we're going to de-escalate, you'll see a monster face-ripping rally. So there's always danger. We're not directionally betting on the markets going in one way or the other. But the recession is real. And just a minor correction, I said the supply chains are seizing in a way not seen since COVID, not necessarily to the extent of COVID. COVID, of course, was a generational event. This is, in many ways it is too, but not to the same extent. And there's all kinds of more workarounds. We're not shutting down the economy and social distancing and, closing schools and all the things that happened back in COVID, which seems like forever ago now. But the supply chains are struggling. They're bending under the weight. China has a lot of cards to play in the trade wars. What we articulated in our most recent piece was, look, the stuff that China buys from us, they could largely get from other countries, soybeans and LNG and other bulk commodities. Whereas, yes, China sells us a bunch of cheap toys and stuff and trinkets that we could live without, but they also sell to us all manner of critical goods for which they have a de facto monopoly. And there's a timing mismatch between the intent of the tariffs and when the U.S. can set up domestic reasonable supply at prices that are workable. And it's an open question as to whether we can actually achieve that. And so that's, I think, the gamble that Trump has taken. I think, honestly, if I look at the price of gold, which I assume we'll eventually get to, but we may as well pivot to that now, it does cause me some concern. I don't like it when gold goes up $100 a day after day after day, like it has here recently. That is a marker for bigger change. And look, it had to happen eventually. I think we all sort of knew that the dollar debasement would eventually be reflected in the price of gold. But to see it happen so quickly, it's a bit disconcerting. I think I've said to you many times before, like the last thing I want is to wake up one day and gold is 50% higher overnight, because that's, detrimental to the rest of my portfolio and to the American way of life and those types of things. So yes, we've been on an unsustainable path. Trump is trying his best to shock therapy, the patient. But there's a lot of change going on right now. OPEC falling apart, gold spiking, dollar weakening against the other major currencies, supply chains seizing up. It has a very strong COVID vibe.
It does, especially since, at the beginning when we started to see, the concerns regarding the tariffs just a few weeks ago, gold took a little bit of a plunge along with the stock market, went below, 3,000 again, but now we're back up to, we almost touched 3,500 overnight here. We're recording this on April 22nd, Tuesday. So your perspective on that, how it seems like at least over the last week or two, gold and the stock market have been trading in reverse. The stock market's down, gold's up that day. Today, gold's down a little bit, but the stock market is up. So it seems like it is very much a fear trade right now moving into gold.
Yeah, I agree. And look, we're off $100 from those highs overnight. Did feel like a bit of an Icarus print. I don't like to be long stuff for too long after an Icarus print, but I've sort of resized my gold position to be more comfortable regardless of how things go from here already. Yeah, it is sort of dollar weakening and gold going up is not sort of historically how things were correlated, right? And so that's one of the signposts that things might be different. We'll see if this little retracement back to 3,400 is a new base for the next upward burst. But something is afoot. The whole OPEC, pouring oil on the burning tape the day after or 2 days after Liberation Day was fascinating to us. And we speculated at the time that maybe the trade was $50 oil, but we let the price of gold run because all the oil producers own a lot of gold. And that seems to have been what's transpired since then. Gold has retraced some of those losses. Is pretty normal. Sorry, oil has retraced some of those losses back in the low 60s, mid 60s. But something's weird going on. Look, anytime you have Russia, Saudi Arabia, and the United States negotiating, whatever the headlines are, there's often, history teaches us something much deeper and more impactful being discussed behind the scenes. Trump is reshaping the world. And he's doing so in a vision that he has articulated, ran on, and was voted on, and is doing exactly what he said he would do. Doesn't mean that he is not going to make a few miscalculations. But yeah, it does feel like we're in a historic period. I don't know if you get the same sense, but there are major tectonic shifts going on. The media is doing its typical poor job of covering it. We're trying to make sense of it internally as a team and to navigate for our writing and for our subscribers a path forward. It's pretty complex. Of course, it makes for an interesting time to be alive, especially if you're in our business as well. So it's not all doom and gloom.
Definitely. I mean, there is talk a lot about a monetary realignment, and we've talked about this, I think, the last time we had you on, possibly gold's role. I wanted to get your perspective again on that, given now that it's not just, Scott Bessent talking about how he's a gold bug, right? We're going to see a monetary realignment. It's also Trump on Truth Social saying that those who have the gold make the rules. So your perspective on this talk on gold, and also it seems like there's so much gold flowing into the U.S. Recently. Any connection there? Do you see gold having a role in the monetary system going forward?
Yeah, I mean, it was a very strange post. I read it with significant curiosity, as I'm sure most other people do. It was a short post. It was a random post, came out of nowhere, presumably. Sometimes with Trump, things that seem random and out of nowhere are a hint as to what's actually going on behind the scenes. Not to read the smoke coming out of the Vatican for too many clues, but I get the sense that there's probably some such discussion going on. If gold gets to 5,000 or 6,000 and then the U.S. revalues its gold, that frees up the Treasury to offset some of the resistance that Trump may be receiving from the Fed, back to our earlier discussion. So who knows? We're not privy to such discussions. So we're left to speculate as outsiders like the rest of us. It was a very bizarre post, and history teaches that such things should not be ignored or minimized. I think it was done with purpose. It's really one of the rare times he's addressed gold on social media. So I don't think that, I think it's consequential. I don't know what it means. I know that it means something important.
It seems like it does, and we're getting little breadcrumbs here and there with respect to gold and a new monetary system and stuff. So I guess we'll see, how this all plays out. It seems like every few decades, though, over the last 100 or 150 years, we have had this sort of monetary realignment. So it seems like, a lot of people have talked about how we're kind of overdue for one. What is your view on that?
Yeah, I think Trump wants a weaker dollar, right? And he's going to try to get it. And one of the ways that you could get a weaker dollar that, is acceptable to some of the trade surplus countries is you just let gold run. I mean, China owns a ton of gold. So you debase all the currencies against gold and everybody remarks their gold. It's sort of not a debt jubilee, but has the scent of it, in a world where gold is 20,000, the U.S. balance sheet looks a lot better than in a world where gold is 3,400. Because if you believe the Fort Knox and the U.S. gold audits, we have a lot of it. And so in our piece that we wrote a few months ago, which was before the whole tariff fiasco, we should say, the U.S. is not broke was the title of the piece. Like, the U.S. has a lot of assets. It has an enormous resource base. It's an energy superpower, still a technology powerhouse. Lots of positive things going for the U.S. still. Today's chaos notwithstanding. But yeah, in a world where the monetary reset that you just referenced, I think gold is probably likely to play a significant role. I mean, the writing's been on the wall for many, many years. Changes at the BIS and all this other stuff that we see. And, if the price of gold is not being manipulated downward anymore, then what stops it from going up? It has been, again, it's unsettling to see gold do this because it does signal that change is afoot. But the counter to that is if we were on a unsustainable path, we had to change at some point, may as well do it now.
I did want to get back to the recession and also energy moving forward here. You mentioned the price of oil, how it's, really down in the dumps right now. Your perspective on energy moving forward amidst this recession?
Yeah, we have a lot of energy. Coal is $93 a ton. Natural gas in the U.S. is down to $3 again. Landed LNG is $11 and change. Brent crude is $65. These are all markets, the physical markets are signaling that there's plenty of supply. This is sort of the long-term arc of primary energy is, in real terms, the price of energy goes down. We posted on Substack notes this morning that at the time that we posted it, at least 1 ounce of gold bought you 54 barrels of oil, which is just a huge huge indictment of the sort of cheap oil crowd, right? I mean, the amount of oil that an ounce of gold buys, if you just exclude the COVID blip on the chart, because, negative numbers make for weird charts, has never been higher. In real terms, as measured in gold, energy has never been cheaper. The world is very well supplied with energy right now. There will come a day where we have a geopolitical event or a business cycle takes off and it's too hot and we're short energy and prices spike. This is like the cyclical nature of the commodity space for sure. But it's not on the horizon now. We got plenty of hydrocarbons. The energy crisis of Europe 21, 22 into 23 triggered a tsunami of supply responses. It always does. All shortages are followed by gluts. We're in the middle of such a glut right now. And this is why OPEC is teetering and we see what we see. And look, if we see peace in Ukraine, doubtful, but if we see peace in the Middle East, if China and the US come to a resolution on the tariffs war, I think you could see that sort of sweet spot of economic revival with cheap energy, which is a very powerful force for growth in the economy.
I think that's one of the things that you've talked about that is very positive, right? Is the amount of energy that we have and possibly cheap energy for the future. I guess that's contrasted though with we're seeing, a devaluation in the currency, right? So for the average person, is this going to be, I guess, a bright future for energy when it comes to energy costs and all of that? Or do you see that possibly the middle class and the poor could still be hurt because, their savings are being wiped out because of inflation and energy prices nominally will still go up?
But actually energy prices nominally are flat in the face of this debasement, which means in real terms, it's not an issue, right? I mean, I drove into the office today and passed a gas station that had sub $3 gasoline. With gold at 3,400, you still can't get more than $3, for a gallon of gasoline. And it's really an enormous amount of work. And so even though in our eyes, we're debasing the dollar because of the price of gold, the average person still sees $3 a gallon gas. That's dirt cheap, right? I mean, it's a testimony to the technological prowess and the giant deflationary machine that is the oil and gas sector. But yeah, I mean, as much as we think Trump wants a quote unquote weaker dollar, it's not like the price of gasoline is going up because the dollar is getting weaker. It's actually flat, which means it's actually a pretty good deal for, Joe Sixpack and, the landscaping company that needs to fill up every day. And so I think there is a world where, again, we have to sort out the current messes, some of which are self-imposed. But if we ever did, look, expensive energy causes recessions. Cheap energy is the foundation of growth. If you have that really amazing mix of clarity on tariffs, less regulations, if Doge does anything or if Trump, deregulates DC, and the springboard out of the recession, I think that's been the play all along, right? We just need to do it from that. When I say we, the Trump administration is telling themselves that we just need to do it ahead of the midterms. So they have a very narrow window to get this done. Whether they do remains to be seen for all the challenges that I articulated earlier, including the deep state opposing him and the Fed being sort of opposed to his agenda as well. So that's kind of where we are. I mean, the fact that gold is skyrocketing and oil is flat is interesting to me. It tells me that there was probably a greater deal that was struck in Saudi Arabia.
And what kind of deal do you think that was?
That's, $50 oil for letting the price of gold run. That was my instinct when we saw that OPEC news hit the wire, and we wrote a piece on it. The pieces as they lie, I believe, was the play. The pieces as they lie is a sort of the assessment. Like, we don't know what was given in return, but OPEC has decided that they're okay with lower oil prices. We've decisively broken out of that, low 70s to high 80s band that it had been in for several years. Look, if we're wrong and it crosses back into that range, well, that's interesting. But I don't think the recession, which we believe is real, is very bullish for oil demand either. So, and as natural gas gets cheaper, substitution continues unabated. So there's a lot of headwinds for oil in our view. Now, there will eventually be a bottom in oil. Are we close to it? Doesn't quite feel like it. There's some sort of perma bulls on Twitter that I'd like to see capitulate before we're ready to say that maybe oil is forming a bottom, but maybe we have. Who knows? But our view is there's plenty of supply. The first chart that we look at every morning is the price of coal, oil, natural gas in the U.S. and landed LNG in Europe, all priced in dollars per million BTU. And just glancing at that chart, you see what we would call very normal, well-supplied markets. Nothing is out of whack. Everything is as it should be. And so, there's no crisis. There's plenty of supply. And if the economy is slowing, that's generally bearish for demand. And so that's why we see the sort of the headwinds to the commodity prices, at least the energy commodity prices that we see. But that's why gold is such a standout, right? I mean, compared to the other commodities, compared to the stock market, compared to the dollar, it's just been one-way travel to the point where it's almost discomforting.
It is concerning. And I guess then obviously our viewers want to be aware and prepared. So if we are going to continue to see oil and energy fall with respect to gold prices, I guess, where are you positioning yourself right now? Because it seems like a lot of wealthy investors, it seems like there's a lot of demand from big money for gold, which I guess makes sense if gold's rising compared to other assets at the moment. But are there any other areas that maybe the common man should still look into at the moment to protect their savings and possibly grow it?
Given this a lot of thought, and our view is we have a good plan. We have a good asset allocation, rebalance a little bit here and there, but mostly just stick to the plan. I don't think I personally and most everyday investors have a very good track record of timing the market. If the day-to-day movements of the stock market are causing you discomfort or the inability to sleep at night, you probably had the wrong portfolio. As you know, we earn in fiat and save by buying real assets, and we invest privately. And the day-to-day move of the S&P or the NASDAQ doesn't really impact our portfolio. Gold does, because it's a big part of our savings, and so we reallocate a little bit, maybe a couple $100 too early, but one never went broke, taking a few chips off the table into a strong tape like this. But by and large, after having thought about it, our objective is we're not going to do very much at all. We're just going to keep building our business and executing our portfolio strategy. And, when something runs and we have a big gain, take a bit off. And when something is, in the doldrums, maybe reallocate to the thing that's down and just keep doing that with discipline over time. I think the most amount of money I've ever lost in my life is when I overreacted to negative news or panics or failed to deploy into, say, the bottom of a global financial crisis or COVID. I have a vivid memory of hanging my mouse button over the buy on a stock that I knew inside out, whose liquidation balance sheet was worth $18 a share, and it was selling for $6. And I thought, why don't I just put half my IRA in this? And I just hovered over it, and I didn't do it. And the thing ran to 45 or 50 within 2 years. I can't time the markets. Most people can't time the markets. Most listeners can't time the markets to this podcast. If you can, great. Lots of money to be made doing that. I think you just have a plan. And if that plan is suitable for your sort of investor policy statement and your portfolio and your situation in life, and if you're nearing retirement and a 25% correction in the markets significantly impacts your projected standard of living during retirement, you probably had the wrong portfolio. That's why you leave it to the professionals and follow your plan. Panic moves during major bouts of volatility, generally speaking, only benefit the market makers.
Well, Doomberg, we really appreciate your insights today. If our viewers are interested in learning more, they can go to Doomberg.com. We'll put a link in the description of this video. There, they can sign up. Any last thoughts before we let you go, and tell us a bit about your website?
Yeah, just Doomberg.com. All our work is there. Elijah, it's great seeing you again, and looking forward to the next one.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 22nd through April 29th, 2025, while supplies last. First this week, we feature 1-ounce silver Canadian maples at their lowest premium in years at just $3.49 over spot. Next, 1-ounce Gold Philharmonics are only $65 over spot. 1 10th-ounce Platinum Britannia are just $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.